Hey everyone, Palantir stock is one of the most polarizing stocks in the market today. You have strong opinions on both sides of the equation, some in favor recommending Palantir stock as a buy, and some suggesting Palantir stock is overvalued and you should sell. I've been fluctuating on that side for several months now. Last year, I upgraded Palantir stock to a buy, and after the stock price rose swiftly, I quickly told investors that it might be a good time to take profits. This year, again around January, I upgraded Palantir stock to a buy. And now that Palantir stock price has increased substantially since then, is it time to take profits again? That's what I'm going to answer in this video. So let's jump right into the analysis.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so you can see Palantir's price action here in the last year. And I recommended Palantir stock at a buy sometime around February last year. And then I suggested investors take profit at some point in the middle of the year last year. Again, around January of this year, I suggested investors buy Palantir stock. I upgraded Palantir stock to a buy. So you could see over the last year, I've had Palantir stock rated as a hold and then upgraded as a buy, brought it back down to a hold, and then upgraded to a buy again. The fluctuations in my recommendation are in connection with the fluctuations in Palantir's prospects and its valuation. The stock, as you could see, has been very volatile, moving up and down swiftly. And so that changes the valuation. And when the stock price gets too expensive in terms of a price to earnings ratio, I tend to favor taking profits and not staying in a stock with now an elevated valuation and so a higher risk versus return. As always, when I'm looking at an investment, I'm looking at it with risk versus return, right? Of course, there's always upside in an investment, but when the valuation is already stretched, now you're taking on increased risk because the valuation is already stretched. How much more expensive can it get? And I'll show you here. Palantir, its stock price is up. Yes, it's at $24.59, up from less than $12 per share around April of 2023 when it was around $8 a share. It's almost tripled since then. But that's not the important factor I look at when I'm considering to buy, sell, or hold a stock, right? The market price is almost, I say, irrelevant. What I look at is what I'm getting in return, the value. If I'm getting more value, I'd be happy to pay a higher price. And that's what I want to share with you next with Palantir. Right now, Palantir is trading at a forward price to earnings ratio of 62.61. That's on the expensive side. You can see that's arguably as expensive or close to as expensive this stock has been in the last year. When I recommended Palantir stock as a buy, it was in the forward price to earnings range of 45. This is where I've felt comfortable recommending Palantir stock as a buy. I targeted this valuation again last year, and that's when I recommended it a buy. And then when it approached this valuation over 60 is when I recommended investor take profits last year. And so it's approaching that area again this year. Of course, Palantir this year versus last year, it's in a much better position this year versus last year. Most notably, Palantir has gained significant traction in enterprises. We always knew Palantir had strong relationships with domestic governments, US governments, and US allies. But what's separated Palantir this year is it's gained significant traction with enterprises, with businesses. And that's the area I was looking for Palantir to gain more traction in. And it demonstrated that. It did that. And so I've allowed Palantir to run a little bit higher versus last year when I would have already made the recommendation that investors take profits. But since the company's in a better position, I'd be willing to pay a higher valuation for Palantir stock this year than I was willing to pay last year. But this much more? That remains to be seen. Let's continue. So Palantir, you can see its operating profit margin rising, and it's done a good job increasing revenue while keeping costs under control. I've commended Palantir for doing that by raising prices by raising revenue and keeping its costs under control, it's expanding its operating profit margin. This is something I look for in making an investment or deciding when an investment is attractive or unattractive. Another thing I consider strongly is the cash flow from operations to sales, and Palantir has done an excellent job in this metric as well, increasing it to 32% in the last few years. But one area I've been a little bit concerned with Palantir is shareholder dilution. It's diluted shareholders significantly over the last few years, increasing the share count from over 1.8 billion to 2.348 billion, or in other words, roughly 500 million shares added to the market. Now that dilutes shareholders. One of the reasons for this is Palantir's been paying stock-based compensation, and that's the reason why the shares have been getting diluted. So Palantir hasn't been going out and selling its stock into the open market to raise capital. It doesn't need capital. It's got a very pristine balance sheet with roughly $3 billion in cash and almost zero debt. That's been one of the positives of Palantir stock, is the pristine balance sheet. Still, if we look at what Palantir is expected to deliver in the current year and next year, 33 cents in earnings per share is the current estimates on Wall Street about what Palantir will bring in earnings per share in 2024. And then that's expected to increase to 40 cents in 2025. So 7-cent increase from 2024 to 2025. That is less than 25% increase in earnings per share. While that is robust growth in earnings per share for an average company, Palantir is not an average company. It's not trading for an average price. It's trading at a super premium price of forward PE of over 60. So I would like to see a much stronger earnings per share expectations growth for a company that's trading at a forward PE over 60. Now, if you compare Palantir, and this isn't an orange for orange or apples to apples comparison, but I just wanted to bring in a couple of stocks here to compare valuation. I brought in Fortinet, a cybersecurity company, and Nvidia, of course, one of the leading AI companies in the world. And when we compare Palantir's forward price to earnings with Fortinet and Nvidia, Palantir is more than twice as expensive as Nvidia. More than twice as expensive as Nvidia. And you've seen the type of performance Nvidia is delivering. Do you think you would want to pay more than twice the valuation for Nvidia versus Palantir? I don't know. I certainly wouldn't, but that doesn't mean that both of them couldn't be a buy, right? You don't have to pick just one. You could pick both of them. So that doesn't suggest that you should not own Palantir stock also. But what about if you look at the operating profit margin? Well, you've got Fortinet at an operating profit margin of 23% and Nvidia at an operating profit margin of 54%, and they're trading at valuations that are roughly half that of Palantir. And then if you look at the cash flow from operations for Fortinet and Nvidia, again, you'll see that they're above that of Palantir, Nvidia at 46, Palantir at 32, and Fortinet at 36, but yet those companies are trading at much lower valuations. Again, suggesting that Palantir's valuation could be stretched here at this point. And so, in conclusion, to answer the question posed in this video, yes, I think it's time to take profits in Palantir stock. If you followed my recommendation and bought Palantir stock around December, January when I recommended it as a buy, you've made some good money on the stock. The valuation is now stretched. It's a good time to take profits, in my opinion. If I owned Palantir shares, I would consider taking profits here. I don't own Palantir shares. I have just recommended it as a buy, and now I'm lowering that recommendation. I'm bringing Palantir stock rating down from a buy to a hold, simply because of the stretched valuation. Admitting that Palantir, again, like I mentioned earlier, has done a great job increasing traction with businesses, cash flow from operations, operating profitability, all heading in the right direction, pristine balance sheet, cutting edge products in one of the leading industries in AI. All of that is great. I'm just concerned about the valuation. So I would downgrade Palantir stock here to a hold. And if the valuation improves, I'll again upgrade Palantir stock back up to a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.